What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. Okay, so the pair that I want to speak about into this video is Euro GBP. The reason for which I want to speak about it is because we are very near to having a quite good trading opportunity on the pair. So obviously I want to give you guys a full breakdown of the situation that we have on it to show you guys where we can be looking for the next potential opportunity. And as usual, I will be keeping the analysis as educational as possible. So first, I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we can be looking for the highest probability setups on this pair. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we can see how the market has just provided a nice M formation. Now, generally speaking, after an M formation, what you expect is for the market to create a nice move to the upside to go and complete the pattern at the previous support, now turned resistance from a monthly perspective. So in this case, the neckline of this M pattern here is exactly this area of previous support, which is now turned resistance, that we definitely expect the market to go and test to complete this big M pattern that we have here on the monthly time frame. Going down on the weekly time frame, what do we have? Now here on the weekly, price action is a little bit different. In fact, what we can see here on the weekly is that in all this impulse to the downside, there is one candle which is not related to the impulse to the downside, which is this green candle here, meaning that at the moment this green candle is quite strong supply. So in order for the market to create the move to the upside that we want to see on the monthly time frame, we first have to manage to break above this supply and obviously resistance. And there is the possibility that when the market will actually reach this green candle, it will actually get rejected away from the area because, as I have just explained, this green candle here is a quite strong supply area for this market. Going down on the daily time frame, what do we have? Now here on the daily, price action is quite clear. I had spoken about Euro GBP after the market had provided this overextended M formation. When the market was here, I made a full breakdown explaining all the reasons for which, from this level, we expected the market to provide this move to the upside. And in fact, that is exactly what the market did. Then we had the creation of this M pattern. And from here, I made another breakdown explaining all the reasons for which, from this level, we expected the market to provide this move to the upside to go and complete the pattern at the neckline. And again, that is exactly what the market did. And by the way, I will link this previous analysis in description. So you find this previous analysis linked in description so you can go and check it out for further reference and more free education. If you have any questions or requests for the next video, make sure you leave them down in the comment section. Also, make sure that you smash that like button and subscribe. Now, at the moment, what we can see is that this market has just provided a nice W formation. Now, generally speaking, after a W formation, what you want to see is the market create a move to the downside to go and complete the pattern itself at the previous resistance turned support. So this red candle here that we have here on the daily time frame is definitely an area that we want to see this market go and test to complete the pattern. Now, keep in mind that we have already identified on the weekly time frame quite strong supply all across this zone, because that is the weekly candle that we were speaking about earlier in the video. So here on Euro GBP, if the market will continue to the upside, it will face that very strong supply, and it will face it after having created a W formation, which by definition is a bearish pattern. So there is a very high probability to see the market create a move to the downside to go and complete the pattern at this area, which is the previous resistance, turn support, and the neckline of the W formation itself. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, so the non-commercials in the market, so basically the biggest speculators in the market. If you're able to read and track their orders, what you can see is that with the last report, hedge funds have closed 15K long positions and opened 8.9K shorts, reaching 100K net positions, which is a strong decrease from the 140K that we had here. So net positions decreased from 140K all the way down to 100K, with 8.9K shorts added with the last report and 15K longs getting closed, with currently 105K short positions and 207K longs. So one of the lowest levels of longs and highest levels of shorts that we had so far. So we definitely have a weak euro. And if we go and see what we have from a pound perspective, what we can see is that overall we have 33.9K net positions, which is quite high from the minus 19K that we had here. So we have currently 61K longs and 27K shorts, and the pound can be quite strong, meaning that if we have a weak euro and a strong pound, this W formation can easily complete at the neckline. So how we will be approaching this potential shorting opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the upside. And we will be waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And as soon as the market will shift from a bullish to a bearish market, at that point, we will be adding Euro GBP to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this W formation at the neckline, which is the previous resistance, now turn support of the pattern as we have just identified. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also let me know in the comment section below any pair that you would like me to break down in the next videos. And I will also leave a link to the mentorship program in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering any question that you have every single day. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.